What is your plan to get money over the next 5 years? Well, that's exactly what we're talking about during today's training. I'm going to map this out. We're going to talk about a roadmap from the very startup inception of a business and how to set it up where you're able to get money, and the money you can get as a brand new startup business, to as you start generating revenue, all the funding options that open up for you there, to when you really start growing and scaling the business. So what this training is going to help you do today, lighting straight, is it's going to basically help you do a couple things. First of all, it's going to help you see what kind of money you can get to get a business off the ground, how to first structure a business to get initial funding. And then as you start to go through these phases of growth in your business, I'm going to map out the exact funding that's available. So you'll know from startup all the way to growth mode, all the capital that you're able to get, where you can get it from, the best sources that are going to work for you. We're going to map it all out during today's training. So we got a lot to cover. Let's dive in and get started. Okay. So where do you see your business in 5 years from now? You're doubling revenue, opening a new office, getting equipment. It really doesn't make a difference what it is. Even if you're retiring and closing the business, what does matter is that all of these things are obviously going to require funding, right? So it doesn't matter if you're growing, if you're trying to take advantage of an opportunity, if you're trying to exit any of these things, you're going to be better positioned if you're able to access funding. So all businesses, for example, can use business credit to achieve their aims, whatever they may be. But instead of year by year, let's really look at this phase by phase, the phases that your business will go through and the capital that's available in each one of these phases to actually help you grow. So really phase one is the starting line, right? It's, it's where we go. It's where we go. It's where we start the business, where we've got a lot of moving parts just to get the business to a point where it can even start to really generate revenue. Okay. So the way your business is set up is directly going to affect your ability to get money. As a matter of fact, the most important thing you can even think about doing in step one is setting up your business the right way. As a matter of fact, a lot of clients I talk to that come to us say, hey, I'll be trying to get my business set up before I go to you. And I said, don't do that. Like, come to us before your business is set up so we can make sure it's all done the right way. Well, the reality is over 90% of entrepreneurs that I talk to and that we help get funding, they have this messed up. They have their fundability messed up, and this is what's making them get denied. So we've got to get this fixed right from the beginning, because if we get this right, then this opens up all kinds of capital, as we're going to be diving into here in step one. So this really referred to as fundability. And it's really the ability for your business to get money from the funding system. It's a lot of the power to get money in your hands is just by getting this one thing resolved. Because again, if you get this done, then your application looks very strong. And it really stands out to lenders and credit issuers. They want to give you money. As a matter of fact, I was just interviewed for a news station in Cleveland last week. And this is exactly what we're talking about is, hey, like, this is one of the most important aspects, if not the most important ingredient, to set you up for funding in the beginning, phase one startup of your business, all the way through to the other funding stages. So of course, you got to get your business name set up. You want to try to select something that's not high risk. Now, there's a great resource for this if you go to NAICS.com. And this is something I find that's so interesting that so few entrepreneurs do or do right. So keep in mind that a lot of things are going to happen based on your industry that you're in. I don't even know where to get started. The credit reporting agencies have comparison scores that compare you to other people in your industry. Those are all going to be messed up if the industry is wrong. Not to mention lenders and credit issuers are going to put you in higher risk industries, even if you're potentially not in those higher risk industries. LexisNexis, the Small Business Financial Exchange, all these other secret third-party credit reporting agencies, they're all going to judge you differently based on the industry that you're in as well. Insurance, the way you can get insurance for the company is individually as key man insurance for you. That's all controlled based on the industry that you're in. So many things are controlled by the industry that you're in, even your bank account, your merchant account, your ability to get all these things. But here's the question. What industry are you in? What is your NAICS code? If you know, then you literally know more than 99% of entrepreneurs I talk to, because 99% do not know this information, and you need to, because so many things that everything to do with getting money comes down to this one thing. What industry you're in determines so many things with your ability to get cash. So to figure that out, go to NAICS.com, and you have to keep in mind that you're the one that determines the NAICS code. When you sit with your banker and they say what industry you're in and you tell them. When you go to file your tax returns, whether you know it or not, your accountant is putting on there the industry that you're in. Whenever you're going to apply for credit or financing or get set up with their credit reporting agencies, they're asking you what industry you're in. And whether you know it or not, you're directly telling them what industry you're in. And you don't want to tell them the wrong thing. And most important, above all else, the value of your business is based on this one thing. There's a clear difference between a financial services company and a software company when it comes to how much your business is worth. So you really have to know what industry you're in. So in order to do that, go to NAICS.com and just do a quick search. You can see here right here at the top right, you can go to find your NAICS code and you can start to look through and drill down exactly what industry you're in and what your NAICS code is. Now, to you, this might seem like not necessary, and I'll show you what it is. If we look at real estate, it's very simple to say you're a real estate agent. Just assume that people know your industry. But if we look at real estate, there's over 30 subcategories here of real estate alone. This is what this looks like. So this is why you can't just go into something as simple as real estate and say that's what you do. You need to come in and specifically say exactly what you do. You're a leaser of real estate, NAICS 5311. So first of all, pick your business name. Make sure that you're not in a high-risk industry. And you can do a quick Google search here of high-risk industries, and you'll see NAICS.com's list of this. And I'm pretty sure it's one of the first things that pulls up here, or high-risk industries, NAICS code. You can come in here and quickly see high-risk intensive NAICS industries, and you can pull up a list of industries to make sure that you try to avoid these. And here's what I mean by this, is that Credit Suite, we are in financial services. We're in software. We can be put in multiple categories. So if I find that one of those categories is here in high risk and one isn't, then I don't want to go with the high risk one. So you want to set up your business name. You want to know your NAICS code right from the beginning. You want to avoid the high risk industries. If you have a choice between multiple industries, it goes a long way to getting this set up the right way. And you obviously want to avoid anything that indicates you're in a high risk industry in your business name. So for example, pawn shops are high risk. I wouldn't want to do Chico's Pawn as my name. That immediately triggers red flags to lenders that I'm in a high-risk industry. I maybe want to just name my business Chico's or find a way around including that indicator of being in a high-risk industry in the name. So a lot of people skip this. Very important. And by the way, if you're getting value from this, hit the like button as we go. And please at least come in and tell me where you're coming from. I'd like to come in and say hi to everybody that comes in. Steve, what's up? It's always good to see you as well. Damien, thanks for bringing Melissa into this. I appreciate it. Alicia says, is there a copy of this video? This video is streaming on our Facebook page right now, and you're on Facebook. So if you go to facebook.com/credit suite, you can find this and our other live streams right there on that page, so you know. And Shanti says, do you know your CD or CDL to GRT, a trucking business funded, particularly the truck itself? We've got a lot of options to actually fund trucks, and usually they're done through equipment financing. So at the bottom of a lot of our slides, you can either give us a call at the number you'll see or go to creditsuite.com/get funding, and we can definitely help you with funding specifically for the trucking business, especially for your trucks. And Quinta, thanks for joining us and bringing D'Amico into the stream as well. And Steve's coming in from Lufkin, Texas. Thanks for saying hello. And if you don't mind, everybody, just give me a shout out. Tell me where you're from. I always appreciate that. So again, you've got to make sure that the business name kind of gives a customer an indicator of what you do, but doesn't indicate that you're in a high risk industry. Addresses have changed a little bit as we get into 2022. And here's what we look at. The best you could ever have is a real physical office location. The second best you can have is a virtual office. Very different than a virtual address. A virtual office is offered through places like DaVinci, Regis, and Alliance. A virtual address is through the P.O. Box, UPS store, iPostal. Very clear difference. You want to stay away from virtual office or virtual addresses. You want to stay away from P.O. boxes, stay away from UPS addresses, stay away from iPostal, and you're better off to go with a virtual office, a place like Regis, DaVinci, Alliance. It's not just an address, but actually a physical, really retail or a physical location. Because if I get an Alliance virtual office then it's an address at a high-rise building down here in Tampa, Florida. It gives me a ton of credibility. Now, if I don't do this, I don't want to do this, I don't want to pay for it, because it could be $100, $200 a month for a virtual office. Then what I want to do is I want to go with the home address as my third and last resort, but I want to stay away from PO boxes, UPS addresses, iPostal, what are called virtual addresses. I've got to stay away from those. All kinds of problems will ensue if you use one of those type of addresses. You want to set up your business entity, preferably a corporation. You can also choose an LLC. You want to get an EIN number. These things are really big and very important to establishing credibility. SBA even says that a sole proprietor is when you are testing an idea. That's per them. So think about it. SBA doesn't even consider a sole proprietor a real business type. They're even saying, hey, this is where you're testing a concept, not even when you're running a real business. So if SBA thinks that way, just think about how other credit issuers and lenders are looking at it. You just don't look credible. So you got to get away from a sole proprietorship as quickly as possible, get to something like an LLC or get to a corporation, and make sure you get that EIN set up. Goes a long way to credibility. We talked about NAICS codes, very important. Business licenses. Get a business license if you can. And let me give you a simple example of this. It's so simple to do and so much credibility to lenders. If I come in here and I type in Pasco County, Florida, business license, then you can see that I can easily, first thing that will come up here is, boom, here's the license I can get in my county. So it's not required, but I can get a license just for operating within my county here in Florida. And I'm going to get this because it's ridiculously cheap. I don't even know how much money it costs here, but I know it's very cheap to be able to get. And it goes a long way. When I get a loan application or a credit application, if I submit my license, it really goes a long way to giving my business a ton of credibility. So make sure you get a business license if you can. Sometimes in your industry, you can get one. Sometimes in your state, in your county, you can get one. It's so simple, so cheap. Get this thing. It goes a ton. It establishes a ton of credibility for you when it comes to lenders and credit issuers. Get a business phone number. Don't use a mobile phone. Don't use a home phone. Don't use a Google Voice number. I don't know why. I can just tell you that for some reason, a lot of vendors we see that issue business credit, they deny people for Google Voice numbers. I have no clue why that is, but they do. So you've got to get a business phone number that's separate from your mobile home phone. You can get a voice over IP like a Ring Central of the world, a Freedom Voice of the world. But one of these really weird nuances that credit issuers have is for that number to be listed with 411. So you can go to listyourself.net to list your phone number if it's not in 411, but it needs to be in 411. As a matter of fact, I'd say half of initial starter vendors, the ones that will give you initial business credit when you have none, half of them have the same requirement that you've got to be listed with 411 or they won't approve you. This is a really big detail that a lot of entrepreneurs overlook. You want to get this set up in phase one of the business. You also need to get a professional website. You need to have a professional email address, meaning stay away from AOL, stay away from Gmail addresses. My email is info@creditsuite.com. My website's creditsuite.com, right? That's what you want. It's that kind of congruency. If you don't have a bunch of money to set up a website, you don't need a bunch of money to set up a website. All you have to do is you just simply go to a place like GoDaddy, set up hosting, and then go to a place like, monstertemplate.com. You can get website templates for less than $100. You can go to Fiverr, Fiverr, Fiverr.com, or you can also go to Upwork.com, and you can get cheap people to set up a website for you. It's so simple and so cheap to do that it's not something that you want to overlook. You want to make sure that you get a business bank account set up in your business name. Look, there's a lot of sources that we'll talk about today that will give you money just because you have consistent revenue coming into your business bank account, even 6 months. If you got revenue coming in your business bank account for 6 months, you can qualify for funding. And I'm going to teach you today some of those sources that will get that for you. So you've got to get that. Other ones, even without business funding, a lot of business credit sources want you to have a bank reference, which you're not going to have unless you have a bank account set up. So you got to get that step done, and you really should set up your merchant account as well. Because if you set up your merchant account, then your merchant account gives you the ability to accept credit cards. And let's be honest, if you can't accept credit cards, you don't look credible. You just don't. I mean, businesses nowadays that don't accept credit cards just don't look credible to lenders and credit issuers. So these are basic things that you really want to make sure that you come in and that you get set up and that you do the right way. James from North Carolina coming in, Philadelphia. Aloha. Thanks for coming in, Crystal. Appreciate it. Cleveland, Ohio's in the house. Clutch City. Clutch City. What's up, Jack? Thanks for coming in. Dwayne from Missouri's coming in. Thanks for saying hello. Nick, hello from Tennessee. I appreciate it. And and Jack says, Is your company making money? 15. Okay, and I'm not sure what that's referencing or if that's a question, but if so, ask me again. Gary Cooper says, I'm from Bellevue, Seattle, Washington. Your information is great, and I appreciate you sharing with us. Thank you very much. Thanks for the feedback, too. I appreciate that. Okay, you also want to get set up with the business credit reporting agencies, and this is how you want to do it. You want to go to creditsuite.com/DUNS, DUNS, or you could just simply come in and just search free DUNS numbers. Now, we just made it simple for you. If you go to creditsuite.com/DUNS like this, all I did was we just put a quick link to Dun & Bradstreet's websites to set yourself up so you don't have to jump through a bunch of hoops. You can Google free DUNS number setup and go right to D&B's website, but usually it involves a few clicks to get where you're going. So if you go to creditsuite.com/DUNS, it's just a quick link to get your DUNS number. The process takes about 10 or 15 minutes to set up, and Dun & Bradstreet will more than likely call you and try to sell you stuff. You don't need what they're trying to sell you. So if you don't want to be sold, don't pick up the phone. If you pick up the phone, they're going to say something like, in order to get your DUNS number faster and activate your credit profile, you should pay them $1,500 or $150 a month. None of that stuff is needed. I'll show you here in a few minutes how to get all you need is 3 accounts on your business credit reports and get your DUNS number, and your credit profile with them gets activated, and you'll get your paydex score. But go to creditsuite.com/DUNS or search for a free DUNS number to get your DUNS number set up. Very important. A lot of lenders and credit issuers want this. Matter of fact, I've been denied before for a Staples credit card. Then I went in and I got a Staples. Then I reapplied because I asked them, I said, why can't we, we come in and why am I not getting approved? I have business credit established. They said, well, we don't find any business credit under your business name. I said, that's weird. Did you run my DUNS? We don't have your DUNS. Here's my DUNS. They came back and immediately approved me. So ever since that day, on all credited applications or finance applications, I include my DUNS number. Even if they don't ask for it, I include it because it only gives me more credibility by having it. So make sure you get this set up. A lot of starter vendors in the business credit world will have this as their basic requirement. And then you need to start establishing some business credit history. You want to get credit that reports to the reporting agencies, because lenders and credit issuers use your business credit for 3 reasons. They determine if you should be approved or denied credit and financing, first reason. How much money you should get. Every credit report has a recommendation from the Bureau of how much money a credit issuer should issue you or a lender should lend to you. And the third thing is it determines your rates and terms. So much like your credit score as a consumer controls your rate on a mortgage. I owned a mortgage company. I could tell you how it works. I have a graph that literally says your credit score is 710, 715, 720, 750, 780, et cetera. And then I have an interest rate attached to that. So your interest rate in mortgages, and like a lot of financing, is literally linked to your exact credit score. It's the same thing in the business world. Your credit score is going to determine the rates that you get. So if you don't want to get 50, 60% interest cash advances, then you need to build some business credit, start paying those accounts as agreed. That's going to give you a good score, and it goes a long way to get you credit financing. You can't even get credit financing in phase 3 that we'll talk about today unless you've done this, and it's very important in phase 1 as well. And you want to start building your business credit from the ground up. So again, you can use starter vendors for that. Places like Uline, places like Supply Works, places like Granger will give you credit when you have none. Granger, if you have a business license, is notorious for giving you $2,500 credit lines. So get credit with these kind of sources. Pay your bills as agreed. That will establish a credit profile and score, which goes a long way to helping you get the most money at the best terms. If you don't know how to do this, go to creditsuite.com/EIN. creditsuite.com/EIN. There's a great step-by-step business credit building guide. Talks to you more about fundability, more vendors, everything you need to know to build your business credit and get it where it's not linked to you personally, okay? So at this point, every step, you're also able to come in and get business credit cards with a personal guarantee if you have good credit. But you can also start to get business credit cards without a personal guarantee, even in this phase, in this stage of phase 1 funding, if you set up your fundability the right way. You also really want to consider working on improving personal credit. Look, let's be honest. We're entrepreneurs. We're risk takers. Our credit usually reflects those risks, okay? That's typically what's going to happen. I was talking to a friend last night, and she said, hey, my score's 819. I said, that's fantastic. The highest you can go is 850, but her score is 819 because she's really, really, really conservative with the risks. That's the way she runs her life. She's very fiscal financially, and she runs her life very conservatively. Me, I'm a risk taker. It's hard for me to ever get to 800s because I'm borrowing money and using other people's money to leverage to do all kinds of crazy things. So as a result of that, I like a perfect example. She bought her car for cash. I would never do that. I would leverage a car. I finance my car, then rent it when I'm not using it and turn it into a revenue generating profit machine, right? So it's just the difference between the way that people think that are risk takers as entrepreneurs and the way that people that aren't risk takers as entrepreneurs think. And the reason I say this is that this is why a lot of our credit gets damaged starting a business, because we're risk takers. We're putting so much on the line and leveraging it to go down the path that we think is best for us and our family. So your credit's oftentimes dinged up as an entrepreneur. Get it fixed. There's all kinds of consumer credit companies out there that can help you do this. And no matter what any guru says to you, your consumer credit's important to getting funding for a business. Don't get me wrong. I'll sit here now and forever and show you all kinds of ways you can get funding where your credit doesn't matter. But I can also show you all kinds of funding where your credit does matter. So the bottom line is, by getting your consumer credit in a good status, it opens up all kinds of funding through these tiers that goes beyond funding that doesn't really look at personal credit scores. So some things to think about there as well. Fresh Air Brown says, truck driver, the trucking business went under from not being funded and did personal guarantee for my business. So I'm back to the drawing board. We're going to help you get going, Fresh Air Brown. Thanks for tuning in again. And Vince says, good afternoon. My brother and I are about to open a freight brokerage, and we would like to add a couple of trucks in the near future. I'd like to get more information on the best way to fund it. Some of the funding we'll talk about today will help you. Also, don't forget to give us a call. Our number's on the bottom of a lot of these slides, 877-600-2487. And when you do that, then what will happen? I always forget to come in and click these questions so they show up here on the screen. And then when you do that, then we can talk to you a little bit more about funding. We've got funding that works directly for you to help with funding actual trucks. So that could give you a lot of help. And Aisha from Chicago, thanks for coming in. Arizona is in the house. Brian, what's up? Thanks for coming in. Jesse, hello. Thanks for coming in and saying hello. And there's Fresh Air Brown says, can you self-lender to help build trade lines even though it doesn't report? No, it's not going to help you. The only thing that's really going to help you build business credit trade lines is the only thing that's really going to help you build a business trade lines is by getting accounts that report. That's the key, is you got to get credit with credit issuers that actually report that credit. So let's talk about phase funding. How do you get a startup funded? Well, the best way I've ever seen to fund a startup is called credit line hybrid. And the way that this thing works is you get about 5 to 8 credit lines, usually upwards of 5 times the amount of your highest credit limit account you have now. So if you have a $10,000 credit card, this can get you $50,000 typically in funding. If you have a $20,000 credit card, you can get $100,000 in funding, etc. Upwards of 5 times, sometimes more, your highest credit limit. You get 0% rates for about 6 to 18 months on this funding, and you could take the cash out. It's why it's called a credit line hybrid. A credit line, the benefit is that you could take cash out, and a credit card, you usually pay a cash advance fee. Credit cards have 0% interest rates. Credit lines don't. You have the best of both worlds on this. You can get cash out at 0%. That's why it's a hybrid of credit lines and credit cards. All you need is good personal credit to get approved, a 680 FICO score higher. If you don't have that, then you can use a guarantor. Half the clients that we help with funding for this don't have good credit. They're using a guarantor, a family member, a friend, a potential investor, somebody else that's interested in helping them being able to get the funding. So all you need is a 680 FICO score higher from you or somebody else to be able to typically qualify for this. The best option I've ever seen to get the max funding is a startup. High-risk industries don't matter. A lot of the things that will hold you back from funding just aren't an issue here at all. Okay, 401k financing. This also works for IRAs. You could borrow against 401ks or IRAs if you have about 25, 35,000 in those right now. They don't have to be yours. You could use somebody else's 401k or IRA to qualify for funding in this beginning startup phase of the business. And you can get interest rates of about 5% credit line or loan, regardless of personal credit. So you can't beat 5% money regardless of personal credit to start a business. It's kind of crazy. And it's all done through a Rob's program or rollover. So there's no tax. So it's got all kinds of tax benefits. You don't pay tax penalties because you're taking money out of the 401k. You're just basically rolling it over. So a really good way using a 401k or IRA to be able to qualify for funding in phase one. Another good way is called securities financing. It's using stocks or bonds to be able to get financing. And you can borrow as much as 90% of the stocks and bonds, unlike 401k, where you can borrow as much as 100% of the value of a 401k. So let me give you a simple example of why this makes a lot of sense. Now, you might say, I don't have stocks or bonds. That's okay. Someone around you may. So let me give you an example. 75% of business owners launch their business getting money from family or friends. 75%. That's most people in phase one are getting money from their personal savings, their personal credit, family or friends, right? So the thing is, if I go to my dad and I say, Dad, I need 25 grand to launch my business, my dad would give me the 25 grand because he knows I'm good for it. He knows I pay him back. But what my dad would do, since my dad doesn't keep 25 grand that he could just give to me liquid in his account, it's earning interest for him. He would go liquidate stocks of which he would pay penalties, right? He'd pay money to do that to give me the money. And the problem with that is that he would no longer earn interest on those stocks and he'd pay penalties for withdrawing that money. So if I use this kind of financing, I can say, Dad, you don't need to do any of that. We can use the stocks and bonds you already have as leverage. I'll leverage 25 grand to that, get a credit line for 5% or less. The stocks and bonds still stay in place. They still earn interest for you like they always have, but they're also helping me get the business launched. And by the way, Dad, I'll even pay you X amount of return off letting me use the money to start the business. So I can make sure that that family member, friend, or investor gets all kinds of incentives. I can give them equity in the company. I can give them, stock ownership in the company. I can give them a return. I can let them, pay them 8% off the money that I'm borrowing. There's all kinds of ways I can make sure they get paid back. But it's a really creative way to be able to tap into other people's money or your own stocks and bonds without relying on other people to give you cash. And if you have your own stocks and bonds, and this is one of the most brilliant ways I've ever seen to finance a business, because you're double dipping. You've got money invested in the stock market. It's still there. It's still earning a return on it. Then you borrow against money that's already earning you money, and then you launch a business with it. And again, you're using your money in two places to do two different things. The only way you lose is if you don't pay back that money and they take the stocks, of course. But if you don't and you do pay it back, well, then you're literally leveraging your money in two places. It's earning money in the stock market, and it's also helping you launch a business. Matter of fact, this is why you should put a bunch of money in stocks and bonds, because why not? If you could put the money in the market, whatever you want to invest in, get a rate of return, then leverage that money and still borrow against it to get a credit line, for example, to fund a business, then you can double dip and use that money for two different ways to earn you a return. So some things to think about. You can also sell part of your business for equity. In this phase one, this is going to attract angel investors. And there's a couple different ways to do this. There's a lot of places you can go to access and find angel investors. We've got training on YouTube at youtube.com/credit suite on angel investors, pitch decks, everything you need to know to successfully get angel investing. And then there's also now a whole new kind of crowdfunding called equity crowdfunding. And places like Crowdfunder, and again, if you type in equity crowdfunding in YouTube or go to youtube.com/credit suite, I've got a whole presentation on equity crowdfunding that teaches you all the different sources that you can go to and which one can work best for your scenario. But equity crowdfunding platforms pull together a bunch of investors into one place. So you could put your pitch there, talk about what your business is going to do, then all these investors can invest and you can raise the money that way. Way easier than going to try to find angel investors and flying around the country and pitching these guys. Either way, it works. You can find angel investors that work for your business and pitch them. And again, the training is on YouTube to do that. You can also use Crowdfunder, or you can use other equity crowdfunding platforms to raise the money. Just remember, angel investors are phase one, not venture capital. When you're starting and launching a business, venture capitalists typically aren't going to get involved unless it's some insanely new potential unicorn type of business you're launching. Angel investors are going to be one who gets involved at this early stage. Venture capitalists typically are not the ones that you're going to typically use to get a business off the ground. DL says, how profitable is a mortgage company? That depends on you. The profitability of any business depends on you and how you run the business. I mean, profitability, if we think about it, really, DL, it just comes down to how much you're earning in income or revenue and what your expenses are. And the difference is profitability. So how you run the business determines how much revenue you're going to bring in and how many expenses you have, which determines your profit. But mortgage companies can be very profitable because, a lot of the mortgages could pay you $2,000 to $10,000 per loan you close. So if you do it right, could definitely be very profitable for you. And Shania says, how do you remove incorrect information on your Dunn's Paydex? There's a Dun & Bradstreet calls this their dashboard. So if you do a search and say, hey, I want to update Dun & Bradstreet credit profile, or you type in Dun & Bradstreet dashboard, D&B gives you a free way to update information on your credit profile with them through what they call their dashboard. So that's exactly how you get that done. Be Logistic, thanks for coming in and saying hi. Ty, is it common for Uline to require you to pay for your first order up front before they grant you the net 30 credit? It is if your fundability is jacked up. Yeah. And that's why I always start with fundability, because Uline will do it either way. Uline will make you do prepaid orders if your fundability is not beautiful. But if your fundability is set up the right way, you can get around that requirement. So if you're being asked for that, my advice is go back to this beginning of this training, go through every single item by item that I went through with fundability, make sure that's in line. And once you have that set up the right way, then you typically will not need to do prepaid orders. And DL also says, does getting good business credit cards require good personal credit, and getting 5 or more vendor accounts to report before you get business credit cards like the Navy, Federal Credit Union, Chase, Inc.? Okay, so this is a complicated question, but I'll answer it like this. 2 types of credit cards you can get. You can get both in phase 1. Well, let me put it this way. If you have good personal credit, you can go get credit cards with a personal guarantee everywhere. That's what credit line hybrid is. That's probably the best bet there. I'd go credit line hybrid versus going to get a Chase or a Maine Navy Federal Credit Union or any of those, because you'll get 5 times more money with the credit line hybrid program I went over than trying to chase personal guarantee credit cards by themselves. So there's personal guarantee credit cards. You can go get them one at a time, or go to credit line hybrid to get 5 times more money. That's that. Then you've got no personal guarantee credit cards. These start with phase 1, what we already talked about, vendor accounts that you're going to use to start building a business credit report score. And if you hang out here in a few minutes, we'll get to phase 3, where we talk about how you can get the Visa card, the MasterCard, what we call bank credit, which is what you're referring to here, without the personal guarantee. So yeah, you need 5 initial vendor accounts in phase 1 to get to like store credit, retail credit, like Amazon, Walmart, like retailers that will give you credit card to buy stuff in their stores. In another phase here, as we progress, I'll talk to you about how to get the Visa card, the MasterCard, the bank type of credit that you're actually talking about here. And credit line hybrid, here's a quick link to learn more about credit line hybrid as well. And here is a credit line hybrid, I think a webinar that we did. I'm not sure with our credit. So I went ahead and put a link up here too, if you want to take a quick screenshot of that with how you can get money with credit line, or how you can learn more about credit line hybrid, which we just talked about today. Okay, so don't forget, crowdfunding is another way to get money. There's 2 kinds of crowdfunding. We talked about equity crowdfunding. Equity crowdfunding is when you exchange equity in your business for money. And there's another kind of funding too, crowdfunding, which is called rewards-based crowdfunding. That's what we think about when we think about crowdfunding. We think about Kickstarter and Indiegogo, platforms like that. Well, that can work. There's actually platforms that are equity crowdfunding and rewards-based crowdfunding. They're just for like real estate investing. So if you're real estate investing, you can find both types of crowdfunding may work for you. And otherwise, rewards-based crowdfunding can be very lucrative for you if you have something unique, a unique concept or idea that the world hasn't seen. Like if you're selling something typical like sneakers, it's going to be hard to go to crowdfunding and raise money unless they're the ones from Back to the Future. Those things are cool. Those ones, you know what I'm talking about. And if you haven't, you got to see that show. That was awesome. Those sneakers are like really rare. So if it's something common, that like a camera, that's nothing groundbreaking, crowdfunding rewards-based isn't going to work for you. But if it's something unique, like I saw a guy that you put this box at the top of the stairs, you open the box and it's a slide. It turns your stairs into a slide. That's really unique and different. It has the potential to go viral. People will share that. So that is a great source of crowdfunding. Also, we don't want to forget about grants. Grants are a great way to get money because they're free. And there's 2 main places that we want to go to for grants. We want to go to grants.gov. That's all the federal grants. We also want to go to Grant Watch. Grant Watch is all the local, state, county kind of grants. So Grant Watch and grants.gov. If you want to learn more about grants, just go to youtube.com/credit suite, type in grants. So we've got training that will teach you how to get grants as well. So this is a great free way to get money to consider in phase 1. So what's your goal right now? Well, your goal is just to increase gross monthly revenue. GMR. I mean, what we're trying to do in phase 1 is get enough money here to start funding for the business to be able to start generating revenue. And the big mark we want to get to is 10,000 a month. If we have 10,000 a month in revenue, it opens up phase 2 funding, which I'm about to talk about. So the goal in phase 1 of all this funding options I gave you is to build your business where it's generating more than 10 grand a month in revenue. If you've done that, that's when we can then move to phase 2 funding and be able to start open up all kinds of other funding options for us. So some things to think about as well. DL says, how much liquid cash do you need to fund a business? It's just an impossible question to ask. It depends on the kind of business that you're actually trying to launch, right? I mean, I can launch a business for very little money, or I can also launch a business that requires a lot of money. It depends on the business that I'm launching. Some businesses, you might need 7 figures worth of equipment to even launch. Some businesses you could get started with just the stuff that's laying around your house, like selling stuff on Amazon. So how much money you need in liquid cash really depends on the kind of business. But I found that setting up your entity, setting up your address, your phone number, your website, you can get that done for $1,000 or less to launch an initial business. All the fundability foundational stuff. But again, that varies. I mean, in California, and to set up a corporation is like $600. In Florida, it's $75. So it really varies on a lot of factors. But I found on average helping 42,000 plus people through this process that about $1,000 or less. About $1,000 to set up the initial business, the website, the address, the phone number, all that stuff. Typically will get you done what you're trying to get done there, DL. Hopefully that helps you there. And Chantry says, is credit a factor when using stocks to secure a loan? It's not. 401k, stocks, bonds, IRAs, any of that financing, credit's not a factor. Does not matter. You can get it as a startup. Credit's not a factor with crowdfunding, equity crowdfunding. Credit's not a factor with grants either. The only one of the funding options that I've shown you today where credit matters is credit line hybrid. It's the only one in phase one where credit matters. Everything else I showed you, from stocks, bonds, 401ks, IRA financing, grants, crowdfunding, equity crowdfunding platforms, rewards-based crowdfunding, none of that is credit-based. You can get all of that stuff regardless of personal credit. And Jesse says, I had my own business for 3 years, depended on my CFO to get started with you. Now I'm starting another company with my CFO, and then goodness, you doing this live video. It's good. And hopefully we can get this business launched and start making a ton of money. We can start getting a ton of money for you to be able to launch your new business. And Aisha says, how do I remove inquiries? Aisha, let me know what you're talking about. Are you talking about consumer or commercial credit? So when your next message you type in, say, how do you remove inquiries on commercial or consumer credit? The answer is different for both. So if you let me know that, I can make sure that you get an answer there. Okay. And again, if you're getting value, hit the like button. That's all I ask, is like, say, hey, yeah, I got value. I just learned something I didn't learn, because we put our heart and soul into like doing the research and getting the information. All we ask is for a little like if we're hitting the mark. So let's talk about phase two funding. This is the point where you're really starting to develop marketing, grow the business, scale the business a little bit. You're at an aggressive sales pace, adding nurture, longer sales cycle. You're starting to get some stability to your business and generating about 10 grand a month or more. It's time for software implementation, system development, right? You're the building blocks of how your business is going to be now and in the future. I mean, this phase should run anywhere between the first 6 to 24 months from launch, depending on how quick it took you to get to the $1,000 to $10,000 mark, right? So there's a lot of options here. This is where we start talking about no personal guaranteed business credit, advanced vendors, vehicle financing, cash management tools that can help you get money as well. So as you continue to build exceptional business credit, you want to pay your bills on time. That opens up more of this kind of funding. So first of all, in this stage, we get access to advanced vendors. And what we call advanced vendors, these are vendors that do not report to a business credit reporting agency. They don't, but they can still help you grow your business. Some simple examples are John Deere, Best Buy, Apple. They will give you credit based on your business credit being established in this phase with 5 accounts on your business credit reports. They'll start to approve you. And they don't report the credit to a reporting agency, but let's be honest, they could be used to grow your business. I mean, I'm literally in the process of buying Apple iPhones right now. If I have, use my Apple account to do that, I don't have to come out of pocket with cash. I can use Apple's money to buy the iPhones and then pay that back slowly as the business continues to generate more money. So advanced vendors are just vendors that don't report to a business credit reporting agency. You're able to start getting it in this phase. You're able to start getting vehicle financing. Again, if you have good personal credit, this is pretty easy. If you don't, you'll need 14 accounts on your business credit reports. If you have 14 accounts across all 3 of your business credit reports, 5 on D&B, 5 on Equifax, 4 on Experian, that totals 14, then you can start to get auto financing without a personal guarantee or credit check. Okay, Ford, Ally, Toyota, GM all offer this kind of financing. As a matter of fact, one of our clients got $185,000 financed at Ford. So an example of what you can start to get in phase 2 of funding once your business starts to even generate a little bit of revenue. And by the way, this question was asked, I think, by DL earlier. This is also when you can start to get the Visa card, MasterCard, or bank credit. When you have 14 accounts on your business credit reports, you can get vehicle financing. You can get bank credit, Visa card, MasterCard without a personal guarantee. This is the stage where you get to that final stage of the business credit building. It's also when you want to start looking into places like Brex, Divvy, Expensify, Lola to manage your accounting, to manage your finances. So places like Brex, for example, well, that's a money management software. It integrates with your accounting software, tracks expenses, and they'll give you even a corporate card. Okay. And they report your payments to Dun and Bradstreet. So you can basically make it easier to track expenses. And then at the same time, build your business credit. So as you start to generate some revenue, these are just great tools. Divvy's the same way. You know, Divvy also reports. They used to report to D&B. Now they report to SBFE, the Small Business Finance Exchange, which is what all the banks see. It's the credit reporting agency that's owned by the banks, where the banks see all of your data. So Divvy is similar to Brex. It can help you with cash flow management, but it also, just by having it, helps you build your business credit. So these accounts help you as you grow the revenue of the business, and also help you establish business credit. Now, a lot of funding options we're going to dive into here as well. Fresh Air Brown says, starting multiple LLCs, like for real estate properties, would you suggest LLC on each property or have one funded for the transfer? Everybody that I know that's in real estate, they have properties, every property in a different LLC. I'm not as big in real estate. Like, one of my really good friends, her entire living is made off Airbnb. That's what she does. She's 37 years old and she no longer works. She had a business. She made money. She put the money into real estate. The real estate market took off. She Airbnbs all of her properties, and she makes a really good living off that. And how she does, and all my other friends that are similar, is they put each property in a separate LLC. I'm not big in real estate. I'm big in vehicles. I like to own exotic cars. I like to rent those when I'm not using them. Every one of my vehicles is owned in a separate LLC. So I think any kind of assets you have like this should be separated. I'm not an accountant, and this is an accounting advice. I'm not an attorney, and it's not legal advice. But even when you run a business, we take our intellectual property and the value, the assets that have value in the company, those are all put in separate holding companies as well. And it just protects the business from a lot of different things that could potentially happen. So yeah, I would consider putting those in separate entities for separate properties. Melissa says, what about updating your NAICS code? Another code, I can't remember. Yeah, the NAICS code. Once you figure out what industry you're in, go back to your tax returns and have your accountant update the correct industry with your taxes. Then pull your business credit reports, see if those exist. If those do exist, go through and update your NAICS code on those as well. You also want to get your LexisNexis credit report and update it on LexisNexis. If you've updated it there and you have the right NAICS moving forward, you should be okay there. That should help you. And then Jesse says, sorry, I had some phone typos. Last statement. I'm starting a new business with my best friend now, and this video is an eye-opener. I will not make the same like I did in my past business. Well, that's great. You know, that's the interesting thing, is that I'm here because I built a mortgage company. Mortgage crisis occurred, lost everything, pushed me to personal bankruptcy, repossession. Literally tried to pass bad checks just to get my electric turned back on. And what happened to me was I personally guaranteed things in my business name. It's why I'm here, because what happened was they came and took all the money out of my personal bank accounts. They took all my personal assets, and they reported bad business debts on my personal credit report, ruining my personal credit. So the business went bad, and it took me down personally. So I'm trying to show you the path to not make that happen in your life. And the reason for that is because, as Jesse says here, when you have the knowledge, then you can apply that knowledge, and it helps you jump ahead because you don't make those mistakes you would make without that knowledge. So let's talk about phase 2 funding. A lot open up here for you. Merchant cash advances, revenue lending, lines of credit, equipment financing. In this phase, $1,000 of revenue, now you can start to get invoice factoring and a lot of these other kind of funding. So merchant cash advances, they just look at your credit card statements and they want to see your bank statements about 3 months. And if you've got consistent money coming in from Visa, MasterCard, or from credit cards, that if you have $5,000 a month of revenue in 6 months time in business, you can qualify for merchant cash advances. You can get financing over 6 months to 3 years. And the funding, usually you can get delivered in 72 hours or less. It's really fast, easy funding. And you can get the money even if you have bad personal credit. So with even 6 months in revenue, this option opens up. So does revenue lending. Revenue lending is very similar to merchant cash advances. The difference is merchant cash advances only look at Visa or MasterCard deposits in your bank account. Revenue lending looks at Visa, MasterCard deposits and other kind of revenue too, checks and cash. So you might qualify for more money with revenue lending because you have money coming in from other sources like cash or checks, whereas merchant cash advances don't take that into account. But again, 6 months time in business, you're able to start getting approved for terms from 3 to 6 months all the way up to 3 years financing, and personal credit doesn't really matter. You're still able to get approved even if you're high risk. One of my favorite credit lines is called Fundbox. And if you go to creditsuite.com/fundbox, there's a secret link there that can help you get approved. The reason I'm sending you there is that, look, we are their biggest supplier of biggest affiliate per se of everybody that exists in the country that sends Fundbox business. We are the top one. We are number one. And so because of that, our clients get preferential treatment. So if you go to creditsuite.com/fundbox, it's one of the easiest ways to get approved. A buddy of mine texted me the other day and he said, hey man, I'm trying to get this loan for $100,000, and I'm going to apply, and here's what the guy's charging me. I said, don't do that, dude. Go to this link. Go to creditsuite.com/fundbox. Just go there and get that first. He went there, got that first, and got $40,000 like that. Same day, he got approved. The next day, he got a credit line for $40,000. Then he still went and we got him a $100,000 loan. So he still got the loan he was going to get, and we got him a Fundbox credit line. By the way, we do this with every single client that we get funding for. We get them funding from whatever way we think we can get them funding. Then we always come at the back end and we get them a Fundbox credit line because it's one of the easiest credit lines I've ever seen. And now they just bumped it where you can get up to $150,000 in a credit line, and it's mainly driven based on how you control your revenue. If you've got consistent money going in your bank account, then there's a good chance you can get approved if you manage your bank account responsibly. And they use artificial intelligence. So they plug right into your bank account. So you don't have to supply all kinds of income statements in order to get approved for them. One of my favorite funders. Equipment financing, you can get financing to buy equipment even as a brand new business. You can get financing to lease equipment if you're 1 year in business and your credit's a little better. So if you need to buy equipment, those are great funding options. There's also something called equipment sale leaseback where you could sell the equipment you already have and then borrow against it to get money. So if you own a piece of equipment, you can tap into this to be able to get money for your business as well. You can also use invoice factoring. What this is, and I say 80%, but nowadays you can go up to 90% get financing up to 90% of the invoices. So let me give you an example. Like Credit Suite, we let our clients pay over 7 or 8 months time. Normal. We actually give them even longer to pay if you call us and you don't look at our website. But what's on the website, we give you 7 to 8 months to pay. Well, that's what's called AR, account receivables. We could go to an AR factor and they could give us 90% of that money right away, then give us the other 10% once the customer actually pays their full invoice. So great way to get money here, because in phase 2, you now have customers paying you consistently. And what's nice about this is that AR factoring or AR financing is the number one kind of asset that's used to qualify for SBA loans. So as we start to get to phase 3 funding, then the fact that you're letting your customers pay you on terms, first of all, makes it easier for them to pay you, which helps you attract more customers. But the other nice thing about this is this becomes an asset you can leverage to get not just AR financing or invoice factoring, but it also could be leveraged to get SBA loans in stage 3 of funding. So some things to consider there as well. And Ayanna says, can you convert from being a guarantor for business credit to a non-guarantor? You can't. Once you're a guarantor, only way out of that's to close that account. And DL says, how do you make sure that bill invoices get paid on time, but keep employees from taking funds to the business? In other words, how do you keep the finances of the business safe? There's a lot of different ways to do that, but some of the management softwares we talked about today, like Bricks and Divvy, will help you manage expenses. Also, only having limited authorized user credit cards and manage the usage of those credit cards are big as well. And again, software like Divvy and Bricks can help you build business credit and also help you with this management of expenses. So some things to think about there as well. Aisha's coming back and saying, how do you get commercial inquiries off a business credit report? You don't, nor do you want to or need to. They don't affect your business credit score. Inquiries, anybody can look at your business credit reports, whether they have your permission or not. Lenders and credit assurers don't care about inquiries on your business credit reports. They don't factor in to your credit scores. So there's no reason you'd want to remove inquiries for commercial credit reports. But if you want to fix damaged business credit, you can go to youtube.com/credit suite and access our training on fixing business credit. It can show you how to remove inaccurate and unverifiable items for credit reports, but you wouldn't want to do this for commercial credit inquiries because they don't really affect your scores. And DL says, have you done a video on how to reach higher income levels? I'm more on how to get money for a business, not on the ins and outs of building and growing and scaling a business. So a lot of ours will teach you how to get the money to grow and scale the business, but I'm not the guy to come to with all the training to teach you how to get the business, growing the revenue, because there's a lot of good strategies there, just not really my specialty as well. And Cam says, what if I do not want to build with the UI and Granger GC? I can personal guarantor. I'm able to run 10,000 to my bank account. Can I build business credit this way? You can. Yeah, it's called credit line hybrid. Credit line hybrid, a lot of the credit lines you get report to the business credit reporting agencies, and you need good to credit. There's two ways to build initial business credit. Vendors like Granger and Uline. The second option is to use good personal credit in a program like Credit Line Hybrid, where you get $10,000, $15,000 credit lines, 2, 3, 4, 5 of them that report. So either of those options will work. The difference is vendors don't require good credit, and Credit Line Hybrid programs like that do. So some things to keep in mind there. Okay, phase 2 goals for funding. What you want to do here is build strong business credit. You want to start putting more accounts on your business credit reports, 10, 12, 14 accounts reporting. You want to get your revenue above $10,000 in this funding stage. Once you get to that, now you're at 10,000 to 2 million in funding. Now things are working. You're scaling the business. You're growing the business, and you opens up even more funding options for you. So now your team, as we just talked about here, can start to access vendor and credit cards. Now you can continue to grow your vehicle fleet with vehicle financing. Now you continue to grow your vendors. Now you can start getting venture capital as well. You can get bank loans, SBA loans, alternative funding as well, and private lending. So alternative loans are often available from private investors, not lenders, credit issuers. They're easier to qualify for than SBA loans. They typically want you to have about a 620 FICO score. But at this point, they want about a year's worth of tax returns, and those tax returns should show a profit. And it's really interesting because I had this conversation with a friend of mine, and he said, hey, I only got approved for this much money. I got approved for 30 grand with Fundbox and got another 5 grand when I sent my tax returns. I said, yeah, we got approved for 30 grand initially, then got 100 when we sent our tax returns. The difference is we're showing a profit and you're not. In the business world, in funding world, it's a big difference between if you show a profit on your tax returns and you don't. If you show a profit on your tax returns, more alternative loans become available. These term loans become available. So if you have a tax returns with some kind of profit and a 620 FICO score, it opens up these alternative loans for you as well. Okay, from online lenders, from places like fintech lenders. SBA loans become available for you here too. You got to have some kind of collateral. We talked about account receivables. One of the easiest ways to get an asset that can be served as collateral is let your customers pay you on terms. It's the number one kind of collateral that's used for SBA loans. By now, you need to have good personal credit. Remember, I already told you in phase 1, you needed to start working on improving your personal credit. And at this point, you have to have established business credit as well. We already talked about that. Plus, you have to have consistent revenue and tax returns that show that revenue. We've talked about that as well. So now by this point, you should be very near an SBA loan, which gives you very long-term and very low rates. Let me give you a simple example. In phase 2, we talked about cash advances. Well, we got a cash advance and we spent $9,000 a month and got $75,000 in funding. Pay attention to the numbers here. We got $75,000 in funding, 75 grand, and our payment was 9 grand a month. Well, when we got to phase 3, we got an SBA loan, and the SBA loan was $325,000, so $250,000 more than our cash advance loan, and our payment was $4,400. Our payment was half as much for $325,000 in financing as it was for $75,000 funding. Why? Because SBA loans are very long-term and very low rate. So this is where you want to get to. And if you've done these things we've talked about, now you're to this phase where you can start getting these. And you're also able to come in and get even more kind of bank financing as well. Okay, so a lot of the funding options up. At this point, you're talking about profitability, starting to make more profit. The more profit you start to show on tax returns, the more funding that becomes available. You want to maintain good business of personal credit, and you want to build that revenue up as high as you're able to get it. And by the way, in this phase, you're also able to come in and start getting access to venture capital, where venture capitalists may want to invest hundreds of thousands or even millions of dollars into your business in this phase as well. And you also want to make sure at this phase that you're continuing to build your business credit. You're getting the retail credit. You're getting Visa cards and MasterCard bank credit. You're getting auto financing. At this point in the business growth, you should not be using a personal credit check for any kind of credit card for the business. Visa card, MasterCard, Staples credit card, Walmart, Amazon, Sunoco, Kinoco for gas, Nordstrom, Macy's, auto financing. None of that should require a guarantee or credit check. At this point, your business credit should get all of that for you. but you're still going to need some guarantees for some other kind of funding, like some cash flow financing options, et cetera. They're going to want that. And at this point, you're continuing to build that business credit, getting fleet credit to buy fuel, repair vehicles, maintain vehicles as well. You're getting the bank credit, the Visa card, the MasterCard. You're continuing again to get that where you get away from more personal guarantees and credit check. And now we get into maturity, 2 million to 5 million plus, okay? Now at this point, you've got C-levels, you've got directors, you're building in for longevity, okay? And at this point, we're talking about most major credit cards you're able to get without a personal guarantee. All vendors become accessible to you at this point. Private and equity, private investors become available for you at this point. And your goal is, long game, right? Balance your cost versus your cash flow versus your profit, leverage funding for expansions and buyouts as well. So a lot happening in this phase. Now, B Logistics says, can I use the same tips for dispatch business? Absolutely. None of what we talked about today is industry specific. It can work for you. DL says, how do owners deal with merchant fees for credit cards? How do you afford to pay the fees for every credit card payment and stay profitable? You build that into your pricing structure. So whenever you're pricing a product, your merchant fees should be involved in what you decide the price for the product should be. So you figure out the right price of profit margins based on what your fees are. So I got to look at my cost to deliver a product or service. What's my cost? Part of my cost is merchant fees. Then I got to build in how much profit I want to make. And then that's what helps determine the actual selling price for whatever I'm going to sell the product or service for. Okay. So that's exactly how you do that. Here's that link to Fundbox to get approved as well. Blair says, will this be available in the back office? It's not. It is available on our Facebook page, Credit Suite's Facebook page. It's available there. He also says, is there a way to keep personal tax reports private? Really, a lot of that stuff, it becomes publicly accessible. Not a lot you can do to lock that down. Nick Harrier says, I love Fundbox, but starting a trucking company, I need funds to get the truck, so no current revenue source. Give us a call. A credit line hybrid can work for this. We've also got specialized funding just for the purpose of buying a truck that can help you as well. And Jesse says, I just have to say, Aisha, you look okay. DL, what are the best secured business credit cards? There really aren't any. Secured business credit cards just don't really exist in the business world. There are some new ones that may come out, but none that I've seen at this time. And B Logistics says, is it a good thing to have a lot of standing credit cards when it comes to business, but considered a bad thing to have? Well, personal credit reports take into account your credit mix. They only want you to have 3 major credit cards. There is no credit mix in the business world. So you're still able to build business credit, and it doesn't matter how many credit cards you have. And Chantrice says, does Kalarma affirm and customer financing options like them help build business credit? Only if they report to the business credit reporting agencies. So the reality is, it's a great question. When you get credit and financing, you should be talking about business credit reporting, who reports. So whenever I get a credit card or a loan, I ask them where they report. And if I have 2 loans, one that reports my payments to DMB and one that doesn't, I go with the one that does report. So you've got to ask credit issuers and lenders where they report the credit financing. If they report your timely payments, it's the only way you're really going to know that information. And at this point, you're exiting the business. You're in phase 5, right? Now you've built a business credit profile that's transferable to a new business owner, right? You've got plenty of history of being able to get financing, of growing and scaling the business. Now you've built somebody people want to buy. And at this phase, being able to have an established business credit profile goes a long way. And at this point, you are a self-fund the sale and structured buyouts to sell the business. You can also go to SBA for acquisition money. Let's keep this in mind. SBA isn't just to get the money you need to fund the business. It's going to be what a buyer uses to be able to buy your business. So you need to make sure that you go through these phases and do what we talked about, because that's what's going to set your business up for it to even be able to get financing from SBA for somebody else to come in and buy your business. So some things to think about. So from startup to exit can be tricky, right? Navigating all this. A lot of funding and credit options available for you. You know what's nice? You don't actually need to know any of this. Just give us a call. Like, our funding team will help you through every aspect of these funding stages without you paying us a dime. Now, don't get me wrong. We've got a business credit building system that will help you get from phase 1 to phase 4 in business credit building in 6 months or less. We can help you build business credit in 6 months or less, where it would take you 3 years to do on your own. But keep in mind, we can help you with all aspects of this. So you only need to call us, email us whenever you need money, and then our team goes to work to be able to help you get that. Now, next time we meet, we're going to be talking about no personal guarantee funding. Okay, what are personal guarantees? Why are they a problem and how to get around them? And again, keep in mind that if you ever want money, give us a call. We work with every legitimate funding program, over 1,000 lenders. We never charge you any fees to help you get loans and credit lines. Okay, and we have a business blueprint where we'll graduate you from phase 1 to phase 5 funding. We can help you get through the phases as you grow the business. Our goal is that you never need to look for funding again. We've got a great paid business credit building program, which cuts years off the process as well. There's our information to get in touch with us, 877-600-2487, info@creditsuite.com. You can schedule a consult online at creditsuite.com/consult. We'll get your business credit reports for you for free on this consult. We'll do a funding assessment to tell you the loans and credit lines you can get now. We will also help you do a fundability assessment, help you fix what's wrong with your fundability. It's all for free. Just give us a call for that. And if you got value here, hit that like button, hit the share button. Let's help more entrepreneurs by sharing. Hit the like button so the social platforms show this to more people. I'm not selling anything today. This is just an hour of straight helping you know every point of money you can get along the way. All I ask for is a like in return, or share if you got a lot of value from this. And like and subscribe on the channel you're watching on. And go to creditsuite.com, top right of the page. There, it takes you less than 2 minutes to like and subscribe on all of our channels. We have daily tips that are 1 minute on Insta stories and on TikTok. We've got 1,000+ videos on our YouTube channel. We have daily tips on Twitter, Facebook as well. And we have a podcast you can listen to on the fly with all the information you need to scale and grow a business disclosed there. And all those links are available at the top right of our page, creditsuite.com. So make sure you get in on that as well. That's really going to help you along the way to get money. Jesse says, had I started with you 3 years ago, I would be around phase 3 or 4 by now. Instead, I never got past phase 1. Now I have to rebuild from the point on. I'm using your service. Well, let us know, Jesse. Look, the bottom line is the whole point of today is that it's really hard to get through any of these phases when you don't have capital. And that's what you're saying here, right? So the reality is that when you do have the capital, then you can move through the phases pretty quick because you can put the money in and continue to grow the business. So if we can help you, let me know. We work with phases all through the funding of these 5 phases. Also, don't forget, here's the information for that free consultation. BJ Logistics, God bless you as well. Steve, I love it, man. You're always here, and I really appreciate you coming in and always saying hello. It means so much to me. And B Logistics says, I'm sharing this in my dispatch class. Awesome. And B Logistics, listen, if you have a dispatch class, if you have a Facebook group, etc., then email us, info@creditsuite.com. I or someone on my team can gladly come and present to your group about funding that could just work for them. So if you're interested in that, just email us. We'll come and do a presentation just for your group, the same as everybody here. If you've got a group of people, I did a Clubhouse the other day for somebody that's got a group on Clubhouse. So I can teach your group how to get money as well. If you have one, just go to info.com or info@creditsuite.com, and we can actually help you with that as well. And okay, that's it. I'm going to go ahead and wrap up. And Nick said, you said there are ways to get funds specifically for trucks, but I don't have personal credit. I don't have good personal credit for a guarantee on credit line hybrid. I have a chunk saved. Give us a call. We'll talk to you about the funding that you are able to get. We do have financing for trucks, even if the credit's not great, even if it's just average credit. So I think we can help you there as well. And DL says, I shared the link to help you tie. I appreciate that as well. Thank you very much. And appreciate your help. That Wells Fargo may be a nice addition to credit options. Wells Fargo is, but they got away with their secure credit card. So we don't really use them much now since they got away from their secure credit card. And they don't really have a good credit card without a personal guarantee either. And most of our credit cards specialize on no personal guarantee. So that's why we don't do a ton with Wells Fargo, but we do some kind of SBA funded with them. So I'm going to wrap up. Thanks for tuning in. Don't forget to like and subscribe. And I look forward to seeing you on our next training where we're talking about more cool ways to get money to start and grow your business. Have a great day.